My name is Brittany Brown. I'm the CEO and founder of a company called LedgerGurus. We've been in business about 4 years, and during that period of time, we went from 0 to 7 figures in revenue. We have over 40 employees that we pay payroll across 6 different states. All of them are remote workers. Our specialization is e-commerce accounting. We decided on that niche about a year ago and have been fully invested in that niche ever since. Now, today I wanted to talk about the experience of onboarding and assessing new customers, because this is something that I have learned is one of the most critical things we do for our success or failure. Now, any of us, if we've been in business for very long, we've all had the experience we have a new customer who burns our house down. And the reason why that happens is because we didn't know what we were getting ourselves into before we got into it, and then we got into it and found that it wasn't what we were expecting, and now we're in big trouble. And it's either knocking us out of budget, or we don't have the skill set that we thought we needed to have, or the whole thing has just become a very frustrating experience for everybody involved. And that happens because the discovery process was not done thoroughly enough. So when I'm assessing a new customer, the very first thing I ever decide, what I call the first litmus test, is whether or not this customer is somebody I would want to work with. So the first litmus test I always say is, do you want to work with this customer? And some of the ways that I determine whether or not I want to work with them is when we're involved in the sales process, I'm seeing how responsive they are. I'm seeing what their internal processes look like. I'm asking their accountant what it's been like to work with them. I'm evaluating every factor I can to see if they are what I would call like the jerk test, right? And if they are customers that I identify that I don't want to work with, then it's the first thing I do is I walk away from those customers. So if I've determined that a customer is somebody I want to work with, now I need to do an effective job of determining what that client is going to need. And that's where the discovery process comes in. So when we're doing a discovery process with a new client, there's really 3 things I'm trying to determine. I'm trying to determine complexity, volume, and expectations. Now there's a whole myriad of ways in which you can go ahead and you can go through the process of determining these, and whether you do it through an interview format or whether you have some sort of intake form like a Google form or something they pre-fill out, or whether you launch them into some questionnaire from your website. Your methodology doesn't really matter. What matters more is your thoroughness and the approach that you take as far as getting a complete picture of what they need. So one of the things that I have found that helps me be most successful is by having a format or a questionnaire that I follow. Something that's been predetermined, where I have the questions outlined and I follow it. And that way I ensure that I don't get going on a subject and then fail to key in on something else. So as an e-commerce business, some of the questions that are critical for me to answer, but some of the things that I have historically missed when I wasn't following a questionnaire, are things like how their fulfillment was being handled, whether they were shipping things themselves or whether they were using a company to ship for them, whether they were manufacturing their product, whether they were outsourcing the manufacturing to China, or whether it was a hybrid. So these kinds of questions are so critical for us in understanding the complete picture of what they're gonna need from us, but they're the types of things that I miss all the time if I'm not being deliberate, and that deliberation comes through the form of a format that I can follow. So what kind of questions do I ask when I'm trying to determine a picture of what the client needs? So the first thing I would consider is money in and money out. How are they getting money in the door, and what part do they need me to play in that? Are they invoicing? Are they, as an e-commerce company, I'm just looking at the channels that they're selling on. I'm asking them questions like, what payment processors are you using? When it comes to bills that they're paying and money out the door, I'm asking them questions like, who's paying your bills? Are you using checks? Are you using credit cards? Are you using ACH payments? Is your bank set up to handle this? Who's involved in the approval process? What part will we be playing in this? And then I ask them questions about payroll. Things like, how many employees? What's the cadence of the payroll? How many are on salary? How many are on hourly? Do you have any sort of process that's intaking the hours that people are working? What payment processor are you currently on? And then I have other questions that I call the ugly monsters in the closet. So example of this ugly monsters in the closet would be something we see all the time is in e-commerce businesses is inventory that's a mess. So if we're asking them questions about what they were previously using and what they're using now, and what kind of systems they've been using and where they're at from an inventory count, sometimes we find out things like that they haven't done an inventory count in many, many months, and that they have no idea where they stand, or that their previous accountant was doing it this way and now it's a total mess. Another thing that I'm really interested in finding out is any time that their processes are very nuanced and that they need things to be done a certain way that would fall outside of the regular flow. So any ways in which we need to accommodate them that were not covered by the natural flow of questions that we asked. Another thing that I need to know about is their software that they're using, and I always get access to the software when I'm doing a proposal, because that's how I then go to the next part where I'm evaluating volume. So the questions I ask and all the things that I cover, that's complexity. And the next thing I need to determine after complexity is volume. And the best place to get their volume is out of their QuickBooks file or whatever other GL system they're using. So I get in there and I evaluate their transaction level, the number of bank accounts they have, and I'm looking for issues that may indicate a cleanup, things like undeposited funds or payroll liabilities that haven't ever gone down, they've just gone up, or sales tax liabilities that have just gone up and never gone down. Other issues that we're all familiar with as accountants that would indicate that there's a problem. So complexity, volume, and then expectations. So with expectations, I really ask 3 questions. I say, where are you right now? Where do you want to be, and how do you plan to get there? And that's how you're going to become aware of what they expect that your role with them will give them. So if really what they want is just books closed out at month end in a timely way, then you know. But if what they're looking for is for their investors to have forecasted financials and for them to really know where they're at from a cash flow perspective, then you know that you need to be factoring that into the proposal as well. So after I've gathered all this information, then I go into pricing, and pricing is really about a calculation that really should be data-driven in some way and not just a gut check, but there is also a gut piece of it. And one of the things you're checking is how responsible will the client be? How big of a pain in the neck will they be to work with? How much will you have to customize your processes to them? So you've landed the client, you've closed the deal, and you're ready to roll forward. Now let's talk about the onboarding process. So onboarding is really critical because it's your opportunity to shine, or it's your opportunity to cause the client distress and make them believe that they've made a mistake and deciding to work with you. So the more smooth and the more streamlined and the more automated this can be, the more impressive you're going to come across as being. So a couple of things to just be aware of that indicate that onboarding is not going well is if it's taking you 60 days or more to actually get into the engagement, it's not going well. If you find yourself ignoring the client or avoiding them, if you're sending out emails that they're ignoring, if they're ignoring or avoiding you, or if they're texting you after hours. Basically, these are all indications that the onboarding was not successful and that it needs to be fixed, basically. A couple things I want to talk about in onboarding is the internal piece of onboarding and the external piece of onboarding. So when we onboard a new client, the biggest tip I would have for this is that first of all, you have somebody within your firm who owns this process from beginning to end. They basically act as a project manager. This person does not need to be an accountant, but they do need to be process oriented. They need to be able to follow a flow and be timely in the way that they execute this. So on the internal side, when we onboard a new client, the first thing we do is we select the team. And this is really based on that team's expertise, their availability, the staff that they have. And honestly, I try to do a personality fit as much as I possibly can. And one of the most important things I'm doing in that early phases is I'm taking what the information that was gathered during the sales process and I'm communicating it with the team that's going to be doing fulfillment. Your new client has just spent a tremendous amount of time educating you during that sales process, and they do not want to have to educate your fulfillment team on stuff that they've already told you. The second thing we do is what I call prep the systems. So this is where we are setting up the SharePoint site for a new client. We are setting up email addresses. We are setting up keeper accounts where we store passwords. We are setting up all of the IT assets. We are identifying all of the access points that we're going to need with that customer. We are making sure that team has access to the QuickBooks file. And we are ensuring that everything within that team is in place. And after we've identified all that and prepared our internal systems for onboarding, and we prepared the team, the most important thing that we are trying to achieve is to get access to everything we need access to. We typically have an access call with that client, and during that call, we get access to all the systems that we're going to need to successfully engage that client. Typically, the way that we do this is we have one person who's driving the call. This is usually a call where we're screen sharing with the client, and they're logging onto their bank accounts, and we're showing them where to go to add an account user. And then there's always somebody on the call also on our side that's behind the scenes, and they're checking all the access points as we go so that we're not losing time and frustrating the client while we check all those access points. So one of the most important things we do when we introduce the client to the new team is we talk about rules of engagement and what everyone can expect in terms of how we treat each other, responsiveness, what we need from the client, and what they can expect from us. And the other thing we talk about is we talk about the scope of the engagement and what was and was not included in the engagement so that everybody on that call is on the same page regarding what can be expected. We also talk about critical deadlines. And the last of all, we talk about their expectations on onboarding. So typically, truly successful onboarding takes about 6 to 8 weeks to be completed. During that period of time, we tell our clients, we will not be delivering financial statements to you during that time that you could take to an investor and take to a banker. We will be fully supportive of like time critical things like running payroll and bill pay will get right off the ground, but it will take us a little bit of time to fully complete the onboarding process. And we have found that by setting those types of expectations, we're more likely to be successful. This is how you as a firm can be more successful. It's time to get extremely process oriented around these things, about the way you bring the data in, the way you do discovery on the client, and the way you onboard them. Some of the best tips I've heard from some of the people in the industry who have done this very well is they automate the onboarding process to the highest degree they can by using things like video format to educate their clients, and they space out the onboarding so that they are not onboarding multiple clients all at the same time. And if you become way more deliberate about your processes around this in the future, you're way less likely to have clients that will burn your house down and cost you money in the future.